Welcome to the HC Insider Podcast, a podcast dedicated to the commodities sector and the people within it. I'm your host, Paul Chapman. Today we're trying to divine what the future commodity trading business might look like, its operating model, the technologies that underpin it, and the talent required. Joining us to discuss is David Ray. David was the former Chief Technology Officer for BP, as well as CIO for BP's global oil business, and has had various roles in technology, innovation, and digitization within BP across upstream, midstream, and downstream. David, thanks for joining us.
Hi, Paul. Great to be here. Looking forward to the conversation.
Fantastic. So I guess our focus is on trying to divine what a commodity trading business or platform would look like in 5-10 years with all these ongoing rapid changes around digitization, energy transition, the talent landscape. It's going to be a bit of a challenging discussion, but I guess starting off, can we look at what will the types of technology at a very base level be available to the trading platforms of the future?
Yeah, I think we're at a really interesting point in time, for want of a better description. And there's two levels to that. There's one is the wider context we're living in, which is technology is available like never before at a price point that's never been available before. Data is being produced at a volume that's never been come across before and at a speed that hasn't been observed before in our time. And lastly, there's something going on about skills. So there's a happening in the wider context is people are building skills, looking to build skills, wanting to use those skills, to use the technology, to use the data. So that's kind of point one for me, is there's a wider context to this thought and this conversation. And then specifically, if you look at what's happened or what's happening around us in commodity trading, again, it's at a really interesting point in its story, in its chapters, as it were. Physical markets have always been complex. They've always been driven by lots of variables. Those variables essentially are lots of data, for want of a better description, but been very hard to create the insight of that. What you're starting to see in a technology lens or a technology landscape that's changing around us, if you start from almost the base up, then you start looking at things like cloud. So cloud is a really interesting evolution in the last few years or so. It's become much more mainstream, I'd say, in even the last 2 years, particularly public cloud. Cloud opportunity gives you price variability, it gives you scalability, and it gives you an opportunity to experiment, I believe. Because the variability, because the scalability, you can try things you wouldn't have tried before because they were too prohibitively expensive from an infrastructure cost or whatever else it might be. So that's the first thing.
Just you'd have to previously have all of that computing power in-house, and so you just didn't have the ability to run and stress test the same scale of algorithm or whatever it might be. Is that what you're saying?
Exactly right. So if you take the example of quantum models or even VAR testing, you look at the things you would try and evaluate if you're looking at forward models to predict or forward models to define new opportunities, you would almost be applying your human bias to it, kind of unconsciously or consciously, because you're looking for those higher probability outcomes, because the effect of running the model, the effect of defining the model, building the model is capital intensive, it is slow, it's all those things. If you took away the limitations of speed and cost, then you can open up the lens and the breadth of what you might want to evaluate and to test. So whether it's correlation analysis, whether that's different evaluation analyses of market movements, whether that's what you would do with the physical financial positions, you can run different models and therefore evaluate different things. I think that creates innovation. That creates a way to think differently about what the opportunities are, equally what the controls are, and a different way potentially to make money. But I think that cloud thing is a first layer that's really interesting and has come into the main and the norm pretty fast.
Kind of unlocking the sandbox, so to speak.
Yeah, I think that's a nice way to describe it. It's unlocking the sandbox, and it's unlocking potential. It's also unlocking money, because these were big capital or big operating cost choices you'd have to make around hosting and the cost that went with that. If you can drive variability in that cost, you only pay for what you want today in this moment, which is an abstraction of the cloud model, then you can use the funds for other things, which potentially takes us into the next bit of the conversation, which is if that's your base level, then there's something around data. So if there's one thing which is about hosting and data, but the second thing is what do you get using it, right? What there's no point in having it unless you create insight from it and understand it. So the concept of whether it's data models through to data lakes, through to data lake houses and data meshes and the language changes all the time. The fabrics seem to be the latest bit of language that seems to be used over the last 3 or 4 months in more prominence. They're all trying to get after the point of how do I access and understand the right data, the biggest volume of data I can at the best price point I can, at the best speed I can. So cloud is the first level. The second level is then data, which I think is around, can be linked to cloud, but might not be. But you're seeing things like Databricks, you're seeing other aspects of that are really harnessing the ability to use the data to create insight from it. So that's the second kind of element to analytics.
Yeah, so you've got what I understand there is you've got this, not only do you have the cloud, which provides the computing power, you've got, and we'll come on to data, you've got huge, vast increase in the amount of data available internally and from external sources. But you've also got this significant, or, I don't know, is it exponential, but improvement in analytics around that as well. Is that correct?
Yeah, that's entirely correct. I think that's the third bit. So if cloud is one, data is two, the third bit for me is about analytics and visuals. And so that is both how you interpret data, how you make decisions faster, how you understand consequence of decision, but also how you derive insight. So examples there that would be interesting, like visualization has become much easier to build, to do. So you don't have to be the technical developer you might have been of yesterday to be able to build complex visualizations and be able to interpret the visualizations the right way. Analytics would be another one. So the ability to run models on like no code and low code. So again, the emphasis there being you don't necessarily have to be a core engineer programmer to be able to build outcomes anymore. You can use capability to do that.
You're thinking about how you can plug your commercial decision makers, provide them the dashboards, the visualization, so that they can start to interrogate this data in from a relatively simple control deck without themselves, she or he, having to be a coder or understand necessarily the analytics behind it.
Yeah, you don't want people messing about with it. It's like the old cliche of you don't want people being innovative with your ledger. It's that kind of thing, right? You want you want to enable people with skills and access to the right technology and data to be able to build the commercial outcomes better than they could before. And the commercial outcome might be a pre-trade decision. It might be a trade itself. It might be a piece of analytics. It might be a risk element. It could be a risk management element or compliance or control element. Point being, you're kind of trying to augment the human in this way so that they can be better at what they're naturally skilled to do, rather than having people playing in spaces that they don't need to do. But it also brings a bit of security and compliance to it. So again, the data models can be managed in various different ways, either through controls and responsibilities and roles and those kind of things, or from a digital security lens that clearly gets applied up and down that picture I've just described, but primarily around data and infrastructure examples again. Because as a company, you want people to be able to experiment and innovate in the right places, but your primary responsibility is for the security of the company, right? And the ongoing security in every definition of that word of the organization.
Yeah. And also, I guess, making a defensible competitive advantage, which I think we will come on to later on around some of the challenges of this, because actually, if a third party starts offering a visualization machine and the data is all just available and out there in the ether, it could change dramatically the nature of trading. I just want to playing kind of the game. Where are we now in terms of visualization and this? Are we providing fantastic, or some companies providing fantastic screens and data management systems to their traders? And where will we be in 5-10 years? Are we going to have virtual reality headsets for traders and they're going to be navigating the Suez Canal kind of thing? Where could this go?
Yeah, we'll have all kinds of people in VR goggles trying to fix out how to move a vessel that's blocked something.
Yeah.
Rather than all those memes going around about the little digger and the massive
I had to get one in.
But it's interesting, right? Because if you go back to late 90s, early 2000s, arguably, a lot of trading companies were thinking about things like visualization. So I remember early on having conversations with traders about trying to visualize P&L and mark to market as a landscape. So peaks and valleys and all that kind of stuff. But it was crude technology. It was very expensive technology. It was hard to maintain. People as individuals like you and I weren't used to engaging with technology in that way. That's all changed dramatically in the last 10, 20 years. I mean, all the anecdotes are there, right? When did you first have an iPhone? What's the processing compute of an iPhone now versus a high-performance computer in the 90s? All those things have changed. So our expectations and our abilities have changed as individuals. So if you take the slightly cliched kind of concept of applying our consumer experiences to the trade floor, I think that's an interesting way to think about how technology is evolving. So whether that is a small scale app that is cheap to run, but is very focused around what I do and makes my life easier, whether that is my Amazon app at home. So on a weekend evening, I can be on my laptop on my couch ordering stuff in 3 clicks, and that's all great. And then I come into the office on a Monday morning and I'm having experiences that are fundamentally different. They may be like decades old SAP screens that are focused around the technology, not focused around the individual. So that analytics and the visuals thing, I think you got to kind of meld that into something about what experiences we want to give people. I'm a big fan of thinking about designing experiences for people and personas. So what would an example be? A trader workbench that is focused around what a physical crude trader needs, what are the 3 or 4 things they need to be able to do their job better today and faster today.
Which is interesting, right? Because that plays onto the working from home experience. Actually, if you're customizing the work experience to be mainly online, right, that's where the point of sort of differentiation happens. I don't really care how good the coffee is or the meeting rooms are. Like, it's all about what environment you created for me online. That promotes both working from home, but also builds significant competitive advantages. The question I have, though, and I guess we'll come on to this a little bit later, but then you've got to start thinking about where is the point of value, right? Like, who in that chain, who's actually fundamentally, or is everyone then starting to create the value? Because historically, it would have been very easy for you to say, oh, well, this trader, in and of their own, autochtonously came up with this trade idea and executed it. And fantastic, it worked out. It was very easy to say that they were the alpha, right? They were the people that they drove all that value. But now if you're saying, actually, hey, I've given my trader, I've given them the data, I've given them the analytics, and I've given them basically a shortened series of options or choices they can make. What does that mean for the trading skill set? And I think we're going to cover that more in detail, but it kind of raises a really interesting point to come back to, I think.
I think it does, because I think it gets to the heart of the future change, or the change that's happening, and then how does that play into a future kind of instance or a depiction of commodity trading. It's not technology alone, it's not data alone, it's not how the prices of the market is going to change, it's also cultural. And I think, as you said, we'll come back to that probably, because I believe there's a big bit of culture and ways of working and operating model, as well as those other things I described.
So I think that's fascinating. So we're talking about like this context of cloud, through data, through the analytics available, and then putting that into a package which is almost bespoke to the individual role or the individual themselves, that enables them to do their job, their role faster, more efficiently, and ideally more successfully. Is there anything more on that, or is that sort of a good snapshot of where we probably are going to end up?
I think that's a good snapshot. I would just add one thing to what you said, which is, if you're not careful, it sounds like it's a narrowing. And I think it's an opening. So traders will be able to access more, whether that's insight, whether that's potential financial flow, whether that's value chain kind of idea, i.e. they can see more of an end-to-end value chain. They'll be able to access more of that, but it'll be done in a way that's contextual to them. So it's not a narrowing in terms of they'll be able to access these 3 things of the 10 things they could yesterday. It's almost there'll be 3 things of another 30 and 40 that they don't even know about today.
Or actually, we're getting rid of the 20 things that have been distracting you.
Yeah, exactly.
So that's kind of the internal side. You and I were sort of struggling on where to put this, but I think like talking about data and technology, and kind of we're talking there building internal platforms that better enable decision making and trading. What about a big thing at the moment, a big question mark out there, but it's certainly a lot of people are attempting to do it, is distributed ledgers technology, blockchain, DeFi, DApps. I guess the idea here is that ultimately a couple of facets of distributed ledgers means that partial ownership, for example, should allow better liquidity and financing of the commodity world, because you've got the underlying assets. Everyone can see exactly where everyone is. It's all auditable in the second. So you don't have these kind of trading on, or you shouldn't have trading on sort of missing receipts or cargoes. But also you've got this, essentially what they would do is disintermediate the current exchanges. So should make the process more faster, more transparent, cheaper, and actually start allowing people to design contracts with a multifaceted attributes that perhaps aren't available now. where do you see, I mean, that's a huge question, but where will blockchain be in the commodity trader's life in 5, 10 years?
Yeah, it's a nice, easy question to answer, clearly, Paul. And if I had a really good answer to it, I would be probably doing other things with my spare time to be able to go after that. I do think it's a massive space of change. So, kind of what we talked about, a lot of what we talked about was where we are today, right? That kind of evolution of how we got to this point and where we are today. I think when you lift your head up and look down the timeline, it gets much more interesting in terms of a range of different stuff. So, and I'm not talking about people talk about quantum and stuff. That is way out too far. But what's very near and very here today is, as you said, whether it's like distributed ledger, whether it's the concept behind the language of blockchain, whether it's DeFi, all these things, they will create, I think, a collapsing of that value chain again. They will kind of much more get consumer producer linkages. They will drive those relationships and transparency around those relationships and those transactions in a different way than was ever done before. And I think there's two really interesting aspects to it. One you've already hit upon, which is efficiency, basically. So by the collapsing of that, you can increase the efficiency and the effectiveness, if you like, of a transaction. It's more trusted, it's more potentially cheaper, it's potentially faster, it's all those things. It's much more transparent, to use that language again. But there's another bit to it, which I think is also interesting, which is about provenance and trust. So I think there's a piece to what could be interesting around these evolutions of online platforms, which are coming, by the way. There's elements of it here. There's more interesting ideas on the horizon, but they're coming. It's not a matter of kind of if, it's a matter of when and how fast and how big. But this idea about trust and provenance, I think, is also an interesting aspect of, if you could go back to almost the original, the base hydrocarbon at its point of origin, understand it and be able to understand the provenance of that and the lineage of that all the way through to it being used. I think that's a really interesting idea and a really interesting opportunity. We've never been able to do it before for obvious reasons, but it feels like that's the kind of thing that's coming down the pipe. And the translation of that into either it's a much more trusted exchange, which is interesting because then you get to things like, what's the other things that go with that? Well, KYC, kind of like knowing your counterparty, it's a pain in the rear process, right? It's a thing that lots of companies have to do. If you got to this model of more sophisticated online platforms, online exchange that had an underlying protocol that was consistent and had everything you described, then you could quickly get to the point of almost like a digital passport, couldn't you? You could get to the compliance angles of that, which means you declare it once, you prove it once, and you're up and running, and that's all fine. Which you can do transactionally right now through other platforms, but you can't do it at scale.
Yeah, I think the example I've used elsewhere in other conversations is people would pay a premium to know that their garden fence is made of wood with more sustainable attributes, or at least a certain segment of people would. At the moment, you've got this, the mixing pot of commodities, the terminology of commodities means that they're all valued the same as soon as they go into the same tank. And I think the world is moving away from that. Provenance does matter. Cobalt from Missouri matters more than cobalt, or should be priced more, and people should be paying more for cobalt there than with ones with more challenging provenances, for example. We do that with diamonds already, right? But this enables us to do it at scale and down to the individual barrel. So it feels like it's coming. It feels like it's going to be a really challenging journey, both technologically and commercially, to get there.
But I think that's a really interesting point, though, because I think it's coming, but it won't stay around for long, because it'll move from being a premium thing to being an expectation and a normal thing. So I think there's something interesting about right now. People will pay premium for that provenance, that lineage, that understanding, as you said, to be able to say the cup of tea in my hand or the tea I buy in the local grocery store, what went into that? And if you think about that question, it's quite a long way back in its origin to be able to answer it, right? Because it gets to energy used to be able to produce stuff. It gets to all the societal aspects of who was involved in the production, all those kind of things. But a lot of companies right now, I think, will pay a premium for that. At some point, you'll start to see that become, it's an expectation. And at that point, it becomes almost an exclusionary thing. It's not even a premium competitive thing. You're locked out if you don't do it.
Yeah. And I think that's interesting because we're doing some work for this podcast on renewable diesel at the moment. And that's a classic case where the feedstock provenance or the feedstock type really matters and should and could command vast differentials in pricing, or even actually, to your point, locking out, right? If you're chopping down virgin rainforest to plant palm oil production to make renewable diesel, that's an absolute no or negative. But if you're using used cooking oil, then that should command a premium for all the sustainable qualities. And I think that's where the scalability of DLT, of we're seeing it in NFTs in the art world, but I think that's where it's coming. But I think that's a fascinating. I think there's almost a series alone to try and dig into that.
Yeah. And once you know the answer, let me know.
Yeah, right. So I think we've got this idea of the trading businesses of the future are going to have much more opportunity to consume data powered by the cloud. That also means they can be smaller in scale. Come on to that. You've got really important how you're starting to consume and visualize that data for your traders, and that could be a real point of differentiation. What does that mean? 5-10 years. Does talent in the commodity trading world look vastly different? Is it very, compared to now where people have got 20 years experience in the physical commodity, they may have come through operations or refining. What does it mean for talent and skills going forwards?
Yeah, I think the question on talent and skills is a really important one. Because if you believe the premise that what's needed, the future of commodity trading has always been needed, but needed even more, is technology and data, then manifest through that, obviously, is people and skills. And I think it works on a couple of levels. One is existing roles and what skills they need. And then there's something about new roles and new skills. But if you take existing, you take analysts around the world working on trading floors, lots of those analysts are still doing manual activities, whether it's wrangling data, kind of putting data together, managing data from various different spreadsheets and what have you. In the near future, what's happening now, but will continue to happen, you'll see those tasks get removed and the human can focus on what humans are better at, which is the actual thought process itself rather than the manual effort. So automation, other technologies around that will take those tasks away. But that means if an analyst today on some floors and some commodities and some desks and some products is spending half to 3/4 of their time doing that, then it's quite a different role when you flip that around and go, okay, but you've got to be spending then up to 80% of your time truly analyzing markets, truly analyzing positions and trying to find new opportunities in either the fundamentals or the existing trade positions. And so there's a change happening there that I think is going to be important. And you'll see that manifest through everything front to back, I think. Back office analysts who traditionally were old school accountants, you'll see that kind of morphing into analysts who need to be good hybrid technologists and financial analysts.
There's almost a creativity aspect to it, right? If the shift is from, I guess, that manual wrangling of data and the ability to sort of the accounting part of the brain, the shift is going to be around the creativity of different ways of asking questions of the data. And I guess scientists have always been creative, right? Coming up with a hypothesis, so to speak, is going to that's going to become increasingly important compared to your ability to, I guess, to understand the mechanics of the model, the stochastic model behind it, or whatever it might be.
Yeah, I think that's right. I think because, especially if you look at, if what I was describing there was kind of existing skills, existing roles, then you're going to start to see new skills and new roles needed. And there'll be new technologies and new data. I'm not really talking about that. It is more what you described, which is the aligning and bringing together different perspectives, so different backgrounds, like different skill sets, to be able to see new opportunities in the data, to be able to see new opportunities in the markets. So I think you'll see more people looking for analogs, people looking for ideas from other industries and people and talent from those industries to bring into this environment to solve these problems. So if you're looking for somebody who's really good at analyzing data and being able to see patterns in data, or being able to see even anomalies in data, what have you, you might go and look at the pharma business, because the recent past of the pharma in terms of R&D is much richer in that technology and use of data than probably the commodity traders have been. So I think that is a key, that's an example of where you're going to start to see people pulled in because they're different, not because they're the same, if that makes sense.
Yeah. And there's always going to be the background to this, which is commodity trading is always driven by real world events as well, though, right? Not everything is going to be in the data. So some skill sets are going to very much be the same. People who are, I guess, can sort of, is that a fair statement? I mean, how does when a pipeline goes down or a conflict starts or a ship gets stuck?
Yeah.
You still got all that piece.
I think that's right. I think the question is the balance point. So if you look at when I started my career in trading, late 90s, 80 to 90% of the floor was based on intelligence of a different kind. It was intelligence of who you knew. It was intelligence of what your instinct in the market was. It was intelligence of what you could find out about the physical flows themselves. That still has a place because that gives you context for a decision. That gives you context for turning data into insight. In those days, it was rarer to see people who were truly fundamental based traders and truly data led in that decision making, as it were. Now I'd say it's inverted probably over that time period. So it's still intelligence, but it's of a different kind, right? It's trying to take new data, existing data, different data, turn that into intelligence. You still need to know, though, whether that is, I guess, being corny in language, whether that is intelligent or not. There's no point in putting a great theoretical model together if you can't actually do what it's indicating. That seems pretty pointless, right? And I know of plenty of examples like that where people have thrown really smart people at problems that when they've come out of the dark room, they've come up with this answer that anybody who's spent 5 minutes in the business goes, but that's just lunacy, right? You can't physically do that. So it's a nice theoretical idea, but practical application is important.
So right now, in the big picture, we're seeing this sort of general shift from the manual mechanical capability to do something to the leaning more on people's judgment, right? And I think that's going on across the world as a result of digitization, as more tasks can be automated, more tasks can be better tackled by computers, handled by technology. You're looking for people with judgment, and you're saying there that actually this is where starting to look outside of the commodities industry means that you're going to get different types of judgment that hopefully collaborating will give you better creativity in the group, better ways of asking questions. Where, when you look 5-10 years ahead, I mean, there's lots of things to unpack there. One is, will leadership of these commodity trading organizations be different? I mean, right now, they're for the most part, almost exclusively, with the exception of some likes of BP, all commodity traders themselves. What is it, and what are those new skill sets as well that you see in 5-10 years that we just couldn't even contemplate right now?
Yeah, and I think there's, before I answer your question, I think there's another angle that's interesting because we've talked about skills, and I think there's a slightly different angle, which is, for want of a description, personality. So if you haven't to adapt and flex much more because things around you are changing quicker. So in theory, if there's more technology, if there's better, faster data, if the markets start to move quicker because of those things, and yes, there's the physical aspects which will always have their own pace to it, then probably need to start thinking moving quicker around that. So, and therefore you need to flex to that to some degree. So the individual who is much more open to, I've made this mistake, or I'm learning from this mistake, or I'm learning from somebody else's mistake, or I want to share what I've done and why I did it, recognizing that it didn't work. That mindset of experimentation, where experimentation is a good thing, I think is a different aspect of talent that I think you will need more of, will draw more out of. I see more now of grad traders, the traders coming on the floor, who are much more of that mindset. They're much more of the, how can I learn and adapt and flex, not I have the answer, I'm right, da da da, all the rest of it that goes with that. And so I think that's an interesting aspect.
Yeah, you move from a world of engineering where there's one right answer to where dealing with clouds of possibilities and so forth, which is I think ambiguity becomes much more prevalent, and the ability to deal with ambiguity and uncertainty and probabilities and judgments and so forth is becomes crucial.
Yes, I think that's right.
Which is typically an aspect of senior, in my experience, as you become more senior in an organization, talent has to deal with greater levels of uncertainty, that you never know where you got the answer right or wrong, right? And that's one of those transitions from early stage career to mid stage, later stage. We're going to be asking that of people much earlier in their careers, it sounds like.
I think that's right. And if we get it right, we should be looking for that. We should be, and maybe that's your point, it should be asking for that, seeking that. I guess I have an underlying kind of view and belief, which is that if you bring those different perspectives together and you bring them together in the right way, they'll probably come up with a better answer, rather than the cliched thing of a like-minded group and like human bias thinking and echo chambers and all that kind of stuff. I think bringing those different perspectives in, bringing those more open mindsets around that, bringing the 20, 30-year experienced individual as well as the grad who's got different skills and different experiences, bring them together in a way, I think you can get to better answers. And I think we'll see more of that through smaller multidisciplinary teams rather than a traditional, here's a desk of traders, then behind them is a desk of analysts, and behind them is a desk of risk, and behind them is a desk of back office. I think you'll start to see stripes through that more, which is a trader, a risk analyst, a fundamental, a quant, a strat, whoever it is, put together to solve a problem to make more money in a different way.
Yeah, and you've got to, we'll talk about that in operating models in a couple of minutes, but you've got to create the culture where that 30-year veteran will listen to the raw grad from probably a very different social background, cultural background to them. And one of the fascinating things, and one of the leg ups the commodity sector has in general, is that they do have access to global talent.
Yeah.
Because they have offices around the world. It's that mindset change to not just draw from the same few universities, University of Geneva, Oxford, whatever it might be, and actually take advantage of that sort of fabric of diversity that you have beneath, around you, but you've got to create the right culture to attract those types of people and to be able to retain them.
Yeah, and I think it's been there in pockets before. So one of the best trading leaders, executives, and traders probably I've ever come across was somebody who did like classics at university. They weren't economics, they weren't financial, they weren't those things, but they came at the problems from a different perspective, and they could find new insight through that, and then they had everything else you need to have to be able to be a great trader. But the second element of that is, think back to the earlier bit of the conversation. If you buy this premise that technology and data becomes more important, and therefore those skills become more important, they're not unique to commodity trading. So it is going to be competitive. It is going to be competitive to get those data skills, those technology skills, because people may want to go to big tech companies, or they may want to go to other organizations that have a stronger purpose to them. So you need to be thoughtful, I think, about those aspects as well, of how do you describe the purpose of what's being done? Because increasingly, and it's become a bit cliched, but I do think there's a change there, which is purpose is a criteria that people use now to be able to make their career choices, as well as hybrid ways of working, i.e. I don't have to spend my 12 hours a day on a trading floor every day. I can have flexibility around that. Those things were pretty unheard of. Go back 2 years, 3 years, never mind 10 years.
Yeah, I do. I think that's part of the same thing that applies with energy transition as well. All of this is going to require different skill sets from outside traditional pools and outside of the industry, but needs to be blended and melded with existing talent and existing people who really understand the physical commodity flows.
Yeah.
So just before we move on to kind of where we'll be all doing this, are there any wild card types of skill sets that we'll see in the commodity trading house of the future?
Yeah, I mean, I'm always curious about. So if you go back to the earlier bit of the conversation about if one of the big things is about how you visualize things and how you analyze things, and if you understand how people make decisions because of that, and how people do that quickly, then there are obvious places to go and find people who have skills in that. Gaming would be one. Online gambling, yes, it comes with kind of associations you may not want when you're trading commodities and managing risk, but you get the idea. There's areas, there's skills in people there who are deeply experienced in how humans make fast decisions and how they visualize data and how they use those things.
Well, aerospace industry, I assume that
Aerospace,
you're
exactly.
talking about visualizing people making fast decisions when you're designing the cockpit of a Generation 7 or whatever you're at fighter. There's an analogy there, right?
There absolutely is, yeah. And then extend that analogy one more level, which is if that's about the tools people are using, then the thought process is about how people are working together, I think is another interesting area to pick up. So the concept of bench is essentially, if you get it right, it's a high-performing team. So where are those other analogs of really strong, amazing, high-performing teams out there in the world that people could learn from? Sport is an obvious example, but there are wider ones. How do you bring some of those expertises of almost like behavioral analytics into something like a trading bench and a trading desk, which then goes back to my earlier point of having the right people who are open to that, the right people who have experience, they can find the nugget of insight in that, i.e. you're not just doing it for the sake of it. That's the really interesting opportunity, I think.
Yeah. So just before, because I think almost the culmination of the conversation, I think is that question about how you build that and some of the challenges to it. What about the physical workplace? COVID, I think, has accelerated our openness to change and the fact that there are plenty of organizations, ours included, that have thrived in a remote, a hybrid working environment. What do you think, will the trading house of the future have glitzy offices Mayfair, or is it as likely to be a distributed network over a series of continents?
Yeah, and I think it'll be a mixture of both, because I think there's There'll be flexibility people want out of their life. There'll be flexibility we can provide from a technology and data perspective that comes with efficiency, but also comes with control, which is an important point, clearly. There'll be all those aspects that are coming if they're not already here today. So those will give people opportunities to do that. You know as well as I do, some of the beauty of what happens on a trading floor isn't a point-to-point transaction. It isn't an email from one person to another or whatever. It's something you overhear. It's something two people connect on, talk about, whatever else it is. How do you create those opportunities? How do you create those, again, the human dimension of that is the happenstance, I bumped into somebody at the coffee machine, we got into a conversation, and I've now got this new idea that I wouldn't have had if I didn't do that. So I think there's always going to be a place for people being together in a space. I think you'll see, go back to your earlier point, I think that COVID's speeding up a lot of plans people already had for thinking about workspace in a different way. That could be this dynamic way of working, which is a hybrid of working from home plus working in the office, but will also be the physical space that you work in together will be different. You'll have spaces that are around really deep thought and deep work. You'll have other spaces which are about highly collaborative, and they'll be designed for that. They won't be just a traditional big cathedral trading floor, which looks impressive, but isn't always right for every type of work that goes alongside that.
Yeah, and it's interesting, isn't it? Because I also think that there's the only way we've ever generated Carl Jung's synchronicity in the past, right, has been this idea that you know, even Google, right, create an office space that's got this one circular corridor, so everyone bumps into one each other in the physical world. I personally, you know, have found more synchronicity by we at Human Capital have, you know, 6 offices around the world. I feel much more connected to the other 5 offices than I ever had because of us all meeting in a virtual landscape more often, more frequently. I think there's still quite a lot of journey to go on defining how much it really matters for teams to meet online. And is there also an equality in people meeting online as opposed to more exclusionary locations, locales, restaurants, etc.? But I think it's ultimately going to be a blend. I think what COVID has done is it kind of accelerated the openness of senior leadership and this kind of idea of, well, I had to do it, they should too, and realizing the benefits. And I think we've got to find that balance, because on the flip side, working from home is great for some people, but for others it means sitting on the end of their bed, you know, never leaving their room kind of thing.
Yeah, and I think that's absolutely right. I think there's a couple of interesting points in there. One is that idea of there's actually been a benefit for people who are in the different locations who work together and they listen together and they do things in a different way, like you said. I think it's going to be interesting to see how much that rebounds or retracts once the vast majority are back in the office. I know minorities have been there for a while, but the vast majority will come back in the coming months, and then that's going to be interesting.
Yeah. So, operating model. Okay, so I think we've just built up a picture of the sort of the stools of what's going to change, the legs of the stool that's going to change. There's some dramatic changes there, because if you look at the typical trading house or trading business today, there is a hierarchy. You know, you've kind of got your top guns being the book leaders and the traders, you know, who have traditionally ordered around the sort of the various support staff, and you've got this very single point of accountability for how and where success is generated. I'm talking in generalities here, and I'm probably talking historically as well. And that's the individual who, for the most part, gets the reward and the risk of success or lack of success. And everything was kind of culturally allied along that, right? So the trader would organize how the operations and so forth would work for them. Compensation regimes were very much tiered to that pinnacle around the trader. If you put together all of what you've just described as even and it's not a very distant future of commodity trading, it's lots of things had to change to be able to create these cross-disciplinary collaborative teams and figure out, okay, well, how do I reward those groups, and where does the real success? The success is no longer rest in one person's decision that is either the point of accountability to reward or to sanction, so to speak.
Yeah, and I think there's lots of aspects in there. One aspect in there is the idea of hierarchy. So I think lots of corporations have grown up and have had like decades, if not 100 years of successful history based on operating in certain ways. And like traditionally, that's included things like hierarchy. So one individual is at the top of that triangle, top of that tree, and what have you. I think the idea of flat culture is interesting, and you're starting to see it be explored now a bit more in some of the trading companies and some of the hedges. This idea of actually you don't have that hierarchical model, you have a more collective model around decision making, around the distribution of reward, around the distribution of risk, all those elements. And I think you'll see more of that happening. So flat culture it's much more collegiate, for want of a better description, in terms of how decisions are made, but it's not kind of all kumbaya altruistic stuff. It's also the sharing of responsibility and the consequence that comes with that. I think that then manifests itself in reward as well, though, which is how do you start to share out those things in a broader way than the traditional model of the head of trading who gets a very large number and the junior trader or the junior analyst who gets a very much smaller number against that. So I think something around the reward piece as well as the flattening of culture.
Which does fly or is challenged by the speed of decision making, often is one of the key determinators of success. Probably only will be more so, if everyone has access to the same data. It's all about the algorithms, and it's kind of the speed of decision, the speed of consumption of data. Then having a group committee to decide what to do, doesn't that just slow the process down?
And I think it's a good point, because that wasn't what I meant by the language. It's almost exactly in pursuit of what you're describing. So right now you could argue, because it's a hierarchical model, it has speed challenges. So if the book leader is the one who has to prove every trading strategy choice, and the market is moving quickly, then how do you devolve that as fast as you can? You devolve it through a flatter model, not through a hierarchical model. So when I say collegiate, it's probably the wrong language, or it's not about everybody makes every decision. It's about you distributing that responsibility in quite a flat way. So everybody's really clear about what their decision rights are, what their responsibilities are, but they're probably bigger than they were in yesterday's model.
Okay, so I think it's fascinating kind of just thinking of all the challenges that face organizations and the changes coming, right? Because I think we're going to end up on competition, but someone's doing this right now. It's fair to say none of what you've suggested or mentioned isn't in some way being done right now.
Absolutely. And I think there's maturity curves. If you look at it, right, you can see there's lots of companies out there like strategy consultancies, etc., who have these models, but you see maturity curves of everything I've described out there. You see people who are trading very much in the mode of, for want of a better description, like yesterday's model, and you see others who are way ahead of what I'm describing, very much rich into that model.
So there's lots of challenges to commodity trading, and there's lots of challenges to this vision that we're building. I just want to zoom in on two, kind of competition, who's actually going to be doing this, and then secondly, really about control mechanisms and compliance and kind of, I don't want to get into kind of Terminator territory, but who's making the decisions.
Yeah.
But first is competition, because existing trading houses are developing at different speeds.
Yep.
And that could have a dramatic outcome on kind of the competitive landscape in a couple of years, let alone 5 or 10, right?
So I think there's a few things going on in the market. So much as I talked a lot about technology and data, I guess the physical manifestation of that is access to information through either assets or through flow. And so you're starting to see, I think you'll continue to see those top players buying assets to be able to access that information in a different way, to be able to increase the scale of what access of information they have and access of flow they have. So that's kind of one.
What type of assets there? Are you just buying access to Google's data, or are you buying physical assets that are nodal points that capture lots of?
Yeah, I mean the physical assets in the supply chain. I don't mean like technology assets, because you're still seeing that as being, it drives information, it drives fundamentals. And so that's one profile you're starting to see. The other is I think you'll start to see people either like pulling out of some of these markets or beginning to consolidate down to core, because they'll need to focus on being really good at something. It won't be good enough to be average at lots of stuff, I don't think, in the future. You'll have to be really good, which is either you're a big player with scale or you're a smaller niche player who focuses on a smaller scope in terms of the breadth of commodities or the geographies or the products or wherever else it might be.
Where does that leave hedge funds and your own people's? Because obviously right now, we're going to have episodes coming up on this. There's an influx of investors into commodities world in anticipation of a super cycle.
Yep.
That included goes into active hedge funds or actively managed funds, you know, where is their competitive advantage going to be? Because they're certainly not going to be buying assets out there,
No.
and they need to, essentially trade opportunistically across all the entire commodity suite or the energy slice.
Yeah, and I think the first two I described are kind of more traditional trading models around the commodity markets, so the energy commodity markets more specifically. I think you've then got other existing participants who aren't those traditional players. So that's where I put hedge funds, because they're almost in the sweet spot entirely of what I've described in the last bit of this conversation. They tend to be, and again, a bit cliched, but they tend to be focused much more on the technology and the data and the skills and everything else I described, and already doing that. And they'll continue to do that. They'll dip in and out of the markets depending what the cycles are doing, like you said. They'll continue to do that. They'll continue to be able to move quickly in and out and at scale in and out. But if we believe elements of what we've described in this conversation already, they have that competitive advantage because that's naturally how they approach existing markets anyway, isn't it? They're very technology rich. They're very skilled at using data to create insight, and they're very quick at being able to build those two things into a commercial outcome. So I think you'll see more and more of that. And then there's a third category, which I think will be potentially new competitors. If you believe, again, the premise of technology and data being at the heart of this, then you'll start to see new potential competitors coming into the market as well, I think.
And there you're alluding to this idea that if data is the fundamental asset and you're buying assets to acquire that data, no one has more data than Amazon as it pertains to movement of physical goods and various services, and likewise Google in terms of, there's other competitors that could come in and have a significant advantage very quickly in trading commodities.
Yeah, I mean, I think it's like, what's the cliche? There's no such thing as new ideas anymore or new thinking. And lots of what we've described, you could give two kind of overarching bits that are history repeating itself. One is commodity traders, energy traders have always been looking for intelligence. They're just doing it in a different way now. It used to be about relationships and people being trite about it. It's now about actually data and technology and how you can use that. So that's one arc of the story. But the other arc of the story is then go back to companies like Enron. Enron were asset light and data heavy. Their focus was how do you create insight without owning the underlying asset, like you said. If that's the case, then there are plenty of companies out there right now who are much better than a lot of the commodity traders in technology and data. Can they access it? No, but that's where you said, right? They've got big, deep pockets right now, and they've got pretty rich bank balances. So it's not outside their means to be able to help that challenge and to be able to resolve that challenge. Point one. Point two is they learn fast. So evidence says, history says the last 10 years alone, lots of these companies move and adapt very quickly, and they learn very quickly. What's the chances of them entering into this space? I think there is chance there, right? And lastly, maybe if you think about this other thing that's going on around us, which is people caring much more about product and provenance and what they buy and how they buy it, this whole idea of kind of being able to bundle renewable energy plus my Amazon purchase plus all those things in one way as a consumer is quite attractive. Amazons of the world, others, because I don't know that it's just them, but others in the world pretty smart at thinking about the consumer opportunity in this space. So
Yeah, and they're the ones that have access to our front doors, right?
exactly, yeah, as we've discovered in lockdown.
Yeah, exactly. It strikes me just as you're talking there, like you've had this trend, and we had Javier and Jack talking the book World for Sale. The last decade, the last 15 years, was these trading houses having to physically acquire and operate these assets to get the information that they wanted, right? And the assets themselves weren't fantastically, lucrative, but the information you got out of it was. But it created a whole bunch of headaches, running those difficult assets. And then, we had the commodity supercycle or the commodity price collapse and blah, blah, blah. What strikes me now is that there's all of these assets might do better, or these operating companies might do better to say, you know what we're not currently monetizing is my data. And I'm going to start auctioning off my data to the highest bidder. And, this is also another source of revenue there's lots of things you can do with that, right?
Yeah, massive. I think, again, it's almost become a bit like cliched and trite again, isn't it? But data is a commodity, or it should be thought of as a commodity in its own right. Now, as with any good commodity, you need to understand what you do with it. You need to understand how to monetize it internally and externally. You need to know what skills and operating model you need to be able to execute that monetization. Lots of companies are thinking about this. I mean, Marco Donan, Mercuria, talks about Mercuria as being a data company. Others are in the space. They're maybe not talking about it in that way, but they're in the space or thinking in that space. And I think that's interesting from lots of angles. One is the whole bit of this conversation we've already had, which is around the importance of data and skills and all the rest of it. That's kind of point one that's interesting. Two is something about creating new revenue streams. So if you look long enough forward enough ahead, we're still going to need hydrocarbons for all the reasons we've described and all the things we use every day and touch every day. But at some point, that's tailing off. So how do you start to fill in some of those future revenue drops and the curve droppage in that? I think you need to think about new ways to make money with what you've already got. And I think the data has an abstracted view, if not the absolute view of the data that lots of companies have and have in their history, has some value to somebody.
Yeah. No, it's interesting. I guess I think as listeners might be recognizing, we could go on all day about this topic. I want to kind of finish up on Skynet. But seriously, there's a couple of aspects of control here that are challenges to, and I don't think ultimately, if history tells us anything, it's not going to stop it. It's just going to create a lot of bumps along the way. One is, and we've covered it in previous podcasts, is you're creating a lot of data. All that data is discoverable. Compliance becomes a huge issue, and that comes back actually to distributed ledgers and blockchains. There's a solution there, and I think this means ever tighter control. But the bit I want to dig in with you is about the risk management side. If we're starting to rely so much on data, so much on the sort of the analytics and the algorithms and providing and trading that way, we still live in the real world. There's still these events, these outsized events, in an algo-rich trading environment. How does that affect the risk world, the risk landscape that the commodities traders face?
I think everything we've described as the opportunity of technology and data, you can flip it into it's a control opportunity if used in the right way. So there's always a question of, okay, everybody's asking for loads of data. So like tax authorities around the world now are asking for underlying transaction data, not your traditional tax completion, whatever it is, at whatever point in the year you do it as a company or as an individual. Can they use it really to get insight yet? Don't know. But they will do at some point in the future if they can't today. I think the same is true for compliance and regulation. You're going to start to see more about it's happening now around the world, but you'll start to see more and more of it, which will be the regulators, the compliance authorities, both internal and external compliance, will be looking for the underlying data, not just the outcome of the activity, if that makes sense, whatever that is, the trade value. It'll be looking for different things in the data in its own right. But again, a bit like the trading opportunity, it's really hard to do. So it's not like this is going to change in the next week, month, quarter. As much as you're seeing more change in technology and data to create new monetization opportunities or to trade in a better way or faster way, you're going to see parallel tracks around compliance and risk management and regulation management. So that's point one, I guess. Like point two for me is your point on algo. So I think more and more organizations will be getting into algo trading, sometimes in a range of different definitions of what that means to them, but they'll be getting more into algo trading. That's quite a different risk management challenge from an internal perspective of understanding the true risk. Whether that's the first line controls, the internal control models, it's a different skill set probably than we've had for the last X amount of decades to understand the inherent risk in an algo position versus a physical position. And I think that will be another area that isn't as well understood right now, but will increasingly be understood. And people will learn from other markets, equities, FX, or other players like some of the hedge funds we talked about earlier. They're probably richer in these areas already, and that's where you'll start to see a transfer of skills and experience.
Well, it's been a fascinating discussion. I've really enjoyed it. I feel like there's a part 2, part 3, and part 4 attached to this. But really interesting discussion. David, thanks so much for your time, and look forward to hopefully having you back on in the near future and carry on the discussion and dig down some of these other avenues. Thank you for listening. If you enjoyed this episode and want to support the show, please give us a positive review on Apple Podcasts or Spotify. To find out more about HC Insider and Human Capital, a search firm dedicated to the commodities sector, go to www.hcinsider.global, where you'll find more original content on the commodities sector and more details on our offering as a search firm and our locations around the world. Thanks again for listening.